So this video we're going over ascending and descending trend lines. So ascending trend line, this is your bull market. Ascending trend line connects the bottoms rather, sorry. Okay, so right here we see the start of a new trend, the higher highs and higher lows. Okay, off of consolidation. So we have broken out consolidation after a whole bear market. This bear market consolidation, and now we are in a trend shift, trend change. Okay, at the beginning of a trend change, or if you're noticing higher lows and higher highs, and price action have started pushing higher, you would draw your trend line and you extend it out into the future. The reason why you extend it out into the future is because future price action would come down and use it as dynamic support and resistance. And also, if it lines up with a fixed level of support and resistance, you have confluence. There's one here. As you notice, price does not come down for a while. So you can draw a new trend line that fits the price action, which is here. It is more steeper, so a more steeper trend line doesn't really give much room for the market to breathe. So a steeper trend line is, the higher the likely it is the price will break the trend line. And just because the break of a steep trend line happens, it doesn't necessarily mean the market is reversing. Okay, so the break of a trend line comes up. It looks like a retest, however, it's not. It is a head and shoulders pattern. However, we just broken out consolidation. So a break, this leg right here was a break of consolidation, right? So what happens at the break of consolidation? You would come back to retest what you just broke. So this right here was a consolidation, the resistance consolidation, and it comes back down to retest. Right, let's not get into that area. So the steep trend line, it breaks, however, it's maintaining structure. All right, let's move over to a bear market. A bear market meaning a descending trend line. So one push up, consolidation, another push up, and consolidation. However, it fails to break out again, and actually starts declining. All right, at the decline, we start drawing our the bearish trend lines or descending trend lines. There's one here, and this was a consolidation, but however, since it's making lower highs, I would start drawing my trend lines from there. Even though it's consolidation, we are at, if you look at the bigger picture, always look at the bigger picture. We are at a level of another. We are approaching the descending trend line of the even bigger picture. All right, now let's get back into our example here. Okay, so you drag out your descending trend line into the future like that. However, price does not make any attempts of retesting this trend line. So you can start drawing trend lines that is more of recent price action. So there is another descending trend line here, still maintaining overall structure. So let's make it red. It's actually, no, okay. Won't delete the ascending trend line, so just keep it there. So this is your overall structure, the overall trend, and this is the same slope. It's parallel to each other pretty much, but the break of this trend line doesn't necessarily mean the trend has shifted. It has to start breaking multiple trend lines. So this blue trend line is pretty important to the break of this trend line is very important to the new bull market for this pair, the EU, the euro dollar. Now if it breaks this trend line, which is the overall market, the overall sentiment for this pair. It's gonna become a bulls market. Let's see another example if we can find one. Alright, let's go on a lower time frame. So I forgot to mention trend lines on a higher time frame are more valid, you can say, than trend lines on the lower time frame. It's because lower time frame, it's a lot of noise, and also higher time frame gives you a bigger picture of what's really going on with the pair. Now let's go to the, let's say 4 hour, maybe 1 hour. Let's go back to that drop from one right here. Let's go back to the drop. Okay, so this drop right here was a breakout of consolidation, a long period consolidation. So this was around 4 months of consolidation after a previous move up. Now, this was consolidation. Now this leg right here broke consolidation. Now that means like we are potentially entering a bear market. Now let's draw a trend line. This is a rather steep trend line. We extend it out into the future. This is rather steep. So retracements don't have much room. Okie dokie. You don't want to try to force trend lines or price into trend lines, because the market doesn't care where your trend lines are. The market moves the way it moves. So it's your job to react to it, your job to analyze it. However, not to fit trend lines into, the other way, I think it's the other way, not to fit price into trend lines. Alright, so that is a breakout of consolidation. This right here, some people would have confused it for a reversal sign, because there was a slight consolidation here. Slight level of support. However, since the move down was pretty, we can say pretty strong, this was an impulse leg that broke structure. So anything that breaks structure, I call it an impulse leg. Also depends on the size of candles. However, in this case, we broke out of heavy, a long time consolidation. Now this was a retracement for the continuation move. As you can see, it broke the steep trend line that we have. However, the overall structure, we can use this descending trend line as the overall structure. However, of course, price didn't go all the way back up to 1.23. So that was a pretty tricky scenario. However, if you knew what type of market you were in, you could have gotten in on the retracement of the trade. Okay. Now, as you can see, the continuation of the trade fell into the daily trend line that we drew back up here, the ascending trend line. Use this as a newfound support. However, it didn't hold as good as we thought it would, because as it touched multiple times. So pretty much the more frequency or the more times a trend line is touched, the weaker it becomes. So this right here was a break of the trend line, a retest, and then more continuation. So the trend lines, you would go in at the retest of a broken trend line. However, you have to be careful on the retest of a steep trend line. You have to be careful on the broken. You have to be careful on the break of a steep trend line, because the break of a steep trend line doesn't necessarily mean price is reversing. It could just mean it needs more space to retrace. Alright, so that's it for this video. Let's go on a recap of what we just went over. So recap, trend lines, it is a simple technical analysis tool which outlines a market trend. I don't know how else to put it for you. In a bull market or in a bullish market, trend lines, you connect the lows or bottoms, and vice versa. In a bear market, you would connect your trend lines on from the tops. Okay. To draw your trend lines, you will connect your first two tops or bottoms, and then you extend it out into the future. Why you extend it out into the future is because future price would come and potentially use it as dynamic support or resistance. A valid trend line. A valid trend line, when you connect two or more tops and bottoms, it is a valid trend line. The more the better. However, again, the more times a trend line is touched in the future, the weaker it becomes. And then, again, be aware of the time frame in which you are drawing your trend lines. Higher time frames hold better than lower time frames, and if you're scalping, you have to be aware of the overall sentiment of the market, overall trend. A trend usually has more than one trend line if recent price action is steep. You can draw a steep trend line on that, but then don't mistaken a break of the steep trend line for reversal, although you can scalp it. Okay, note. A side note. Oh, okay, this was a pretty important side note. So the steeper the trend line, the more likely price will break it. However, it's still maintaining trend because of the overall trend line that you drew. And then be aware of the kind of market you are in. Again, some traders. All right, so this is I've seen a lot of traders do this. So some traders mistake a break of a steep trend line as the first sign of reversal, but in reality, price needed more room to retrace. So in the case like I showed you right here, steep trend line. Oh, we have just reached a level of support. Now it's reversal now. However, the break of the consolidation, this right here was not done. So you need to take that into consideration. This right here was it just needed more time and more, I guess this was more of a liquidity grab for the next move down. Okay. Alright, so I guess that is it for the trend lines video. I hope you guys took something from it, and I will see you in the next video.